Lumovest. Accurately evaluating a company's worth is critical in many sectors of the financial industry, including economics, accounting, and investment. Welcome back, everyone. Today we're back with a new video that highlights the difference between market capitalization and shares outstanding. So let's start. Many fields of research, including technical analysis and fundamental analysis, are used to discover possible trading opportunities. The projected size of a firm is one of the most essential criteria for people working in the investment industry. The number of outstanding shares and market capitalization, which is the number of outstanding shares multiplied by the current share price of a single share, are two of the most popular measures to assess a company's size. The number of shares of a public business currently held by shareholders is a component of market capitalization. The market capitalization of a firm with 3 million shares outstanding, a $50 per share stock price, 150 million. Both market capitalization and outstanding shares apply to the public corporations which have publicly traded shares, whereas private companies do not. Market capitalization. The term market capitalization refers to the basic measure based on stock price, multiplying the number of outstanding shares by the current price of a single share to find a company's market capitalization. A 5 billion market value would be achieved by business with 50 million shares and a $100 per share stock price. Market capitalization, often known as a market cap, is a monetary number that fluctuates as daily as a company's share price fluctuates. Because firms differ in size, market cap figures are broken down into groups to make analysis easier. When assessing possible trade prospects, market capitalization is frequently used to help determine a company's worth. Stock prices, and on the other hand, are in many cases very subjective. A stock's price does not move under any mathematical formula. Though day traders are always trying to come up with money-making equations, different elements are weighted differently in the pricing. Thus, even the market capitalization is a subjective estimate of worth. Small cap companies have a market valuation of less than 2 billion. Mid-sized companies have a market valuation of 2 billion to 10 billion, whereas the large cap companies have a market capitalization of 10 billion. Large cap businesses are those with high market capitalization, such as General Electric, Apple, or Starbucks. Blue chip stocks are the stocks of these firms. While larger and more established firm may appear to be a superior investment, many in the financial sector advise against underrating small cap stocks. While smaller, younger businesses are more likely to fail than larger counterparts, they also have far more opportunities to expand. It may be quite profitable to get in on the ground floor of a successful small cap stock. The size of a firm, on the other hand, does not always imply that it is good investment. Large businesses may be encumbered by debt and have restricted growth possibilities and have a slew of other issues that come with operating on a larger scale. What exactly is the significance of market capitalization? It helps investors figure out how big one firm is in comparison to another, because it represents what investors are willing to pay for companies' shares. A market cap gauges how much it is worth on the open market, as well as how the market perceives its prospects. Firms having a market value of 10 billion or more are considered large cap corporations. Large cap companies are known for delivering high quality goods and services, as well as paying reliable dividends and growing steadily. There are frequently dominating players in well-established sectors, and their brand names may be well known to nationwide audience of consumers. As a result, large cap stock investments may be regarded more conservative than small cap or mid cap stock investments, offering lesser risk in return for lower potential growth. Businesses have a market value of 2 billion to 10 billion are classified as mid cap. These are usually well-established businesses in rapidly growing industries. These medium-sized businesses might be working to expand their market share and improve their overall competitiveness. This stage of development will most likely determine whether or not a firm reaches its full potential on the risk/reward scale. Mid-cap stocks are somewhere in between large and small caps. Mid-cap stocks may have greater growth potential than larger cap stocks, while also posing a lower risk than small cap stocks. Companies have a market value of 300 million to 2 billion are considered small cap. These are often small businesses that cater to specialized markets or developing sectors. Small caps are most hazardous and aggressive of the three groups. Small businesses have fewer resources, which might make them more vulnerable to business or economic slump. They might also be subject to fierce competition and uncertainty that come with new, untested markets. Long-term investors that can withstand wild stock price movement in the near term, on the other hand, may find small cap firms to be substantial growth potential. What factors might influence the market capitalization valuation of a company. A company's market cap can be influenced by a variety of variables, changes in the numbers of shares issued, as well as significant changes in the value of shares might have an effect when warrants on the company's stock are exercised. The number of outstanding shares increase, diminishing the stock's current value. The company's market worth might be impacted if warrants are exercised below the current market price of shares. A stock split or dividend, on the other hand, usually does not affect the market cap. Since the number of shares outstanding has grown as a result of the split, the stock price will be lower. You'll need to assess your financial objective risk tolerance and time horizon before putting together a portfolio with an appropriate mix of small cap, mid cap, and large cap companies. A diversified portfolio with a variety of market capitalization can assist you to decrease investing risk in one area while still supporting your long-term financial goals. Shares outstanding. The number of shares outstanding refers to how many shares of a firm are currently held by its shareholders. When a private firm needs money, when it does an initial public offering IPO in which it sells shares on a public stock exchange. If a firm needs more money, it can issue new shares at a later date or buy back the stock to reduce the number of shares outstanding. Outstanding shares are any approved shares owned by or sold to a corporation shareholders, except treasury stocks held by business itself. The number of shares outstanding refers to the total number of shares held by all a company's shareholders, including institutional investors, share blocks, and restricted shares held by companies' executive and insiders. For a variety of causes, the number of outstanding shares in a corporation might change. If the firm decides to issue more shares, the number will rise. Companies generally issue shares when they obtain funds through equity financing or when they exercise employee stock options, ESO, or other financial instruments. What's the best way to find out the shares outstanding? Publicly listed firms are required to publish the number of issued and outstanding shares in their investor relations sections of their websites or on the website's local stock exchanges. In addition to listing outstanding shares or capital stock or their balance sheet, the Securities and Exchange Commission (SEC) quarterly reports in the United States provide data for outstanding shares. Analysis of financial statements. The number of outstanding shares is one of the factors used to calculate market capitalization. Outstanding shares can be used in a number of computations other than market capitalization, since they are not input quantity rather than a computation. Earning per share (EPS) and cash flow per share are two additional significant metrics for which the number of shares outstanding is important. At CFPS, any value can be multiplied by the number of outstanding shares to obtain a per share valuation. The entire number of outstanding shares multiplied by the current share price of it one share equals market capitalization. Small cap, mid cap, and large cap companies have different market capitalization values. Are market capitalization and market value the same thing? What variables have an impact on a company's market capitalization? Is it possible to value a stock using market capitalization? Mention all these in the comment section down below. Until we come up with our next video, a small goodbye. See you soon.